a strange week and hard to make sense of, with bodies falling out of the stock market, and yet a huge second quarter GDP number. We got non-farm payrolls today, all this data and market action. The dominant thing is what's happening overseas. And it's not Gaza and it's not Ukraine, it's what's happening in foreign economies away from us. Those of us who work in the markets are conditioned to having the U.S. be dominant, and we were schooled in our ill-spent youths not to pay attention to overseas, that all that really drives markets, especially interest rates, mortgages, housing, and so on, is all intrinsic to the United States. And the change has been gradual in the last 25 years. I've argued over and over on Fridays the impact that it has on the U.S. job market. But on financial markets, we have to look at the outside world all the time. And the stock market gave way on Thursday after Europe gave way. Not just because the GDP number, not because the thought that the Fed's going to come earlier rather than later, but Europe is a deepening mess. Its inflation rate is now barely positive. Its industrial production is sliding. A Dutch outfit that measures global trade with a survey lag, the most recent data clear back in May, says that global trade in May actually contracted, shrank. That's a slowdown that is percolating through Europe, through emerging nations, certainly through Japan and China, nobody knows. The slowdown overseas, with German 10-year bond yield set a new low today at 1.14. Disturbing. Spanish and Italian yields have been following the German yield down as the ECB has been providing easy money to banks, which have used it not to make loans but to buy sovereign bonds. And all of a sudden, in the last 48 hours, Spanish and Italian yields started to pull up and away from German yields. And that's, to have European sovereign yields that low is a danger signal. But to have Club Med begin to break away again is even greater danger signal. Japan, the last-ditch stimulus by the Bank of Japan, which presumably will have a new last-ditch. There'll be a digging new ditches on Monday. But the Japanese economy is sinking under the weight of its new sales tax. China, just opaque. The data comes out of the place, but its own public policy is very hard to read. But U.S. interest rates, the U.S. 10-year sitting at about 250, my hunches would be over 3, and mortgage rates would be over 5 if it were not for the slow economy away from us. So I leave you before the weekend on Friday with more to do with your time. You can't just watch what's going on in the United States. You've got to look outside. Good weekend.